You know, one of the biggest issues when we are trading is not that we are bad at day trading or we are bad at reading the price action. One of the biggest issues is watching the wrong stock. A lot of times we are getting to max loss only because we are not watching the right stock. Yeah, after getting to max loss and switching through the watch list or through the trades which members traded, we ask ourselves that question: why wasn't I watching that stock which everyone was trading, right? And exactly, Peter B. Another issue is that pushing the setup on a stock which is just doing nothing, right? Sometimes you have an idea, but it's not really perfect, right? That's sad, but I've been doing it like for a lot. So guys, I'm going to review your trades, then I'm going to go through my trades today. Just hopefully you'll learn something from the mistake I did on Walmart today. And then I will do a recap, which could also be beneficial, hopefully. And yeah. So let's start without wasting any time. And let's see what B-Tank did there. B-Tank traded NIO. Catalyst setup was a parabolic reversal on NIO. Indicators, the price on the 5-minute chart was extended from the 9 moving average on the 5-minute chart. Yeah, okay, I see that here and I see that here. Both times you see it was extended, so you tried it parabolic reversal 2 times today. First trade, you entered above the doji, and the second trade at the consolidation. Okay, that's the stop loss, perfect. Exit, the target was the 9 moving average on both of the trades. First trade, partial when the price touches the moving average on the 2-minute chart, and the stop loss at that break even. And the second trade, let me read that quickly so that we don't waste time, and I will explain it all. So you wanted to get a 4-1, you got 2-1, you wanted to get 6-1, you got 4-1. Both are really good risk to rewards in my opinion. You did well. Unfortunately, you didn't get as much as you wanted, but still that was good, right? Now let's see. Okay, so let's go through the trades, guys. Traded NIO. Both times were extended from the 9 moving average in the 5-minute chart. Now the first trade, according to my new rules I added, would be avoided. And can anyone tell me why I will not really take a parabolic reversal on this trade? The second trade was really good. I like it. I mean, looking only at the 5-minute chart now. We are not looking at the 1-minute chart. We're not looking at the 2-minute chart. Just looking at the 5-minute chart. Why would this be a little bit of something I don't really like to trade? Was it extended? Yes, it was enough extended, to be honest, which is not bad. 40 cents at least to the horizontal moving average is a really good move in NIO. Yeah, it is after the first leg, and not only that, it just broke the resistance area right here. I could just see the body right here, the wick right here. It just broke this resistance area. Sorry, this shouldn't be an arrow, it should be a line. It just broke the resistance area, right? It was consolidating in this range, maybe in this range, and it just broke it. And after breakout, I would usually expect a pullback to the breakout area and then a continuation. This trade, on the other hand, it had literally no pivot point around it. It was even more extended than at the first time, right? And it was so clean on the 5-minute chart. So this was, yes, this was really good, and I like it so much. And yeah, it bounced off the resistance, right? I'm glad that you actually took a partial at the bounce. Now let's go through the smaller time frames, which are the entry points. Yeah, you see this actually, guys? Looking at it on the 2-minute chart, it's becoming a little bit more clear, right? That this is a resistance area, or this is a resistance area after the breakout, right? So it's breaking out and you're taking it on the first low just after the breakout, and the pullback was really small. It's really good that you took a partial, because this is usually happening a lot. It's dropping down to the previous resistance area or support area, bouncing out of it, and then just going up. I'm not sure if I took it to the long side there. I think I actually took it to the long side there, but that will, I'll share my trade in NIO right now. Anyway, this right here is perfect. You see a fake breakout, right? It's having a flat resistance on the 2-minute chart. It's breaking out, getting squeezed back down, and you're taking it on a new 2-minute low to the short side. And let's go to the smaller time frame. I see why you took it on the 1-minute chart, right? A reversal candle below daily level, a little bit late entry, better if we get it exactly at the break. Why is that? Because we just mentioned there is a pivot point on your way. It could be here, it could be here. We're not sure where exactly it's going to bounce from, right? Which is why this trade would have been a little bit risky. Here it was better. I honestly don't like getting after an engulfing candle because the risk to reward gets messed up. But looking at this flat area and then we're having a fake breakout. Peter B, by the way, this is something you love to trade, right? Peter B here is trading a lot of reversals, parabolic reversals, and he mentioned to me that he loves getting into shorts after engulfings on the 1 minute chart if those engulfings are forming a fake breakout, right, Peter? So this entry right here, Peter wouldn't really take it to the short side after this engulfing. Why is that? Because there is no fake breakout, and this is something which I personally don't like to take as well because of the bad risk to reward. The difference between this engulfing and this engulfing is simple. This engulfing is happening on an uptrend, right? And usually after that happens, it just touches the 9 and bounces out of it. However, this engulfing is happening after a breakout, right? So it's sort of fake breakout and a new 2 minute low, which formed a good 2 minute shooting star and a new 2 minute low. So yeah, this is definitely not a bad trade. If the entry was here and even if it worked out after this entry, I wouldn't have really liked it for my style. Not that it's bad, but this entry was decent and it looked good on the 5 minute chart, it looked good on the 2 minute chart, and there was no pivot point except for here, right? And look at this, how the previous resistance is usually acting as support. This is what we should be a little bit cautious about. Let me show you quickly my NIO trade since we're reviewing NIO, and I'll show you that I took it to the long side. I'm not sure if I took it exactly where you had taken it, right? So you're taking it to the short side. Yeah, I took it a little bit earlier before you. So this was a quick scalp play which I wanted to get. It didn't do the scalp play, the momentum play which I wanted it to do, and I exited break even. Then I see that it's actually forming sort of an ABCD pattern on the 1 minute chart. It did break above this pivot point right here, pulling back, holding here, forming a higher low wave. I'm getting into a long position, stop loss at the low of the previous wave. It continues, and look, so what's happening right here, guys? Breakout is happening, right? After the breakout, it's pulling back into the range and getting squeezed back up, which is why I'm re-entering and moving my stop loss. So basically I doubled my position right there, and let me get forward, took a partial at the high right here below the daily level just in case. It's dropping down, but this drop isn't scaring me out a lot because this is not literally parabolic reversal, which is usually scaring me out, and I know that previous resistance could actually act as a support, continuing to go in my favor, and then the partials all the way up. Let me see, this was your short right here. Yeah, you see how the previous resistance is acting as support? This is really interesting, and I need to just implement those levels right here for ads, especially when I'm having small position left right there. But yeah, really good trades, really good, well managed, good job on that. And let's see what Lenny did right there. So Lenny traded NIO. You did literally the same thing I did right there, right, Lenny? But with a better ad, with an earlier entry on the W shape. So this is what Lenny did right there, guys. ABCD pattern. After it did break out, right? Pulling back, holding, got even a better entry than I got on NIO. Pulling back one more time. Added to his position right there one more time because this is W shape now forming on the 1 minute chart. And a little bit of an early partial. Remember, when we are trading ABCD patterns are breakout setups, right? Ascending triangle, descending triangle. Those are breakout setups. You are getting in with the trend, and the trend is your friend. And when you are getting in with the trend, there is literally no reason to just early partial. If this trend move doesn't work out as well as it should work out, then it wasn't really a trend, right? So basically, either we hold on to it and get a good reward on it, or we just get stopped out because it didn't work out really well, and the next time we're getting into a trend which really works out, it will be a really good winner for us. Now this ad right here, this ad I see it was at a failure at small ABCD pattern, right? And remember what we said, we're having 1, 2, 3, 4, something around that. When the stock is getting so extended, 4 consecutive candles, the closest pivot point is way down there, right? We know that sometimes it will break out, but we're not sure how much it's going to break out. When the stock is so extended, we can't really add into it because yes, it will break out most probably, but how much is it going to run after it breaks out? This is the question, right? And are we really willing to add to our position and ruin our average on a stock which is more likely going to pull back before the continuation? If you can add and move your break even or stop loss to the previous resistance area, which is maybe here, then that's good, you can add. But if you add and your average will be somewhere at 1990, maybe 20, somewhere around here, and you know you will not survive a pullback if it's going to happen, and it is going to happen eventually, right? Most probably not 100%, then better to just avoid the add and still hold on to your position, which is working out, right? But yeah, I like your first entries, good partials, and this was a really good run there. So DH back, let's see what you did right there. DH back traded Facebook, and on Facebook your first entry stopped out after a shooting star and a climactic volume. So I guess that was a long which got you stopped out, right? Or it was a short since the beginning? Both of them were shorts, right? Okay, now looking at Facebook, it's decent, it's not bad, right? It's getting extended from the 9-week average in the 5-minute chart. The closest pivot point we have is somewhere around here, right? So what are you doing? You see that there is increasing volume on the breakouts. It's forming a shooting star at the high of the day or reverse hammer. You're taking it to the short side on a new low, having stop loss at the half of the week. It's getting you subbed out, which is totally fine, right? It just was a good setup, which unfortunately didn't do it at the time you wanted it to work out. You are re-entering on a new 1-minute low after it bounces off a daily level. So now you're having an increasing volume at the high of the day. You're having a daily level on your way, and you're having a new 1-minute low, which is also good. You're getting into your position. This is not something I would have traded, and as usually I'm telling you guys, it's not that it's bad, I just don't prefer it because the risk to reward gets messed up for me. I don't love having my stop loss within the 1-minute candle. I'll definitely use the high of the candle, so I tend to avoid them. Engulfing candle is definitely not a bad sign, right? I just avoid it because of the bad risk to reward. So he's taking it to the short side, partialing, adding to the short side on a small bear flag which is forming right there. On the 2-minute chart you see that there is selling pressure above it. On the 1-minute chart we could also see that there is selling pressure. It's breaking down which is the place where you added. Stop loss for me personally after the add would have been somewhere above this area right here, which is also half of the week. And that's it. Yeah, that was a really good one. Good job there. I like the add definitely, and I like that you added after it broke down that pivot point which it was holding somewhere down here. So let's see what else we have right there. Zach, you're welcome. So Zach traded WKHS. So what do you do with that, Zach? This is setup from yesterday that I was watching, but I didn't take for 2 reasons. One, there was a clear daily level at 1898, which is here, I assume, right? And there was an ask of 13,000 shares at $19. Okay, which could have acted as a potential resistance area, right? I wanted to see the price test one or both of these before shorting it. I was tempted to short it after the blue candle at 10.21. So let's see, you wanted to short it down here. But instead I followed my trading plan. I'm wondering if you would have shorted it after the blue candle or avoided it. So let's see what it did right there. Right? WKHS, what do we have right here? We have a first leg up, right? Then we're having a second leg up, and usually third leg up is the leg where reversals could happen, right? Just not all the time, but most probably the third leg up is the leg where stocks starting to reverse. At the same time, it was extended from the non-moving average at this area, right? It was somewhere around, I don't know, 60, 70, 80%, which is somewhere around 5% or 4% of the stock's price, which is also a good thing, right? And it also formed a new low exactly below a daily level. Would I have taken it? It's not the cleanest and it's not the best stock. Why is that? Because it's not parabolic. If you see, it's going up, it's pulling back, it's going up, it's pulling back, going up, consolidating, going up, consolidating, going up. Basically, it's not parabolic. It's taking its time to reach the highs. But at the same time, it wasn't the worst because it already did two legs up, right? It already did a huge move which is around $2, and $2 on a $20 stock is 10% of the stock price. It's not even 20, so it's more than that. So it did around more than 10%, right? Move with literally no pullbacks. Closed as a good candle below a daily level, new low right there. And if you miss that, you are having a new 5-minute low for the first time since the uptrend right there. So yeah, would I have taken it? I'm not sure I would have taken it because I don't like this price action. Was it good? It was good, and if you had taken it, it wouldn't be a really bad step, even if it failed right there. Then we're actually having an extreme reversal right there. This is double top of the second top lower than the first one, with the stock which made a move bigger than the average true range, I assume. I'm not sure if it's uptrending on the daily chart. If it is, I would avoid this short right there on the extreme reversal. If not, or if it's somewhere chopping in a range, I would like it for an extreme reversal. And guys, we're having the extreme reversal webinar tomorrow at 8 p.m. Eastern, in the 5 p.m. Eastern in the webinar room. So let's see what Heather did. Heather has been killing it. Heather traded Kodak, and this was an engulfing crack setup, guys. Why is that an engulfing crack setup? Because firstly, it engulfed the candle right here. This is the first candle. It engulfed that candle, and then it's making a new 1-minute low. Would I have taken it? Personally, I wouldn't have taken it because it was above all the moving averages, right? And I have this week right here, I have this support right here. I'm not sure where I put my stop loss, at least half of that. But he's here, he's trading also based on the level 2 and the time it sells. He has some hints which are telling him when to enter trade. That was a really good entry. I love how much you held onto your trade and you partialed all the way down. This ad was perfect. I love it. I like it when they start to round, right? They try to go up, make another leg up, they break up, but then they just fail and they start rounding to the bottom side. And I love your ad. You're getting in as close as possible to the resistance. You're not getting at the breakout. And personally, knowing my style, I would wait for a new low to enter after the rounding bottom. Whereas what I need to do is what you did right there. It's something I'm trying so hard to work on, but my psychology is not letting me. When you are seeing that this is a resistance so clearly, a stock is already so weak, why waiting for the breakout to enter? Just it will make us feel good that the stock is starting to move in our direction. But these type of ads, they are going to give you a really good risk to reward. Even these type of entries, they will give you a really good risk to reward. If your psychology allows you to take these type of entries, I would really recommend trying to practice it and trying to do that. My mistake here is that I've been trading over 2 years, and I've been trading over 2 years with my style entries at the breakouts, even if I see a clear support or resistance area or a clear direction, and I got used to that. And if you guys are still not used to something, you need to develop that muscle memory. You need to develop that habit of getting entries on pullbacks, getting entries as close as possible to supports or to resistance. Don't develop the habit like I did right here, because it's really difficult to get rid of it right now. I want to improve my trading to the next level and get these type of entries. Sometimes I do, but it's really difficult to do that for me now. Peter B, let's see what you did there. So Peter B traded Walmart at 11 o'clock. By the way, the yellow dot is a parabolic SAR indicator, which is showing kind of the stop loss to beat for the current conditions, and it also shows you if the stock is long or short. Okay, I see that. And do these type of dots here on the top appear before the drop happens, or after the drop happens those dots start to appear on the top? So the high of the day, it is above it? Yeah, the yellow. I'm just curious about that. When did these ones start? They kind of real time, right? So you didn't have any dots here on the top by this moment, right? And they started appearing on this candle right here, right? And they start after the candle close, right? Okay, this is interesting, by the way. I will make sure to add it because just I'm a little bit curious and I want to see what this is doing. I love implementing some stuff which are helping me with my style, but let's see how it works out. Anyway, let's see what you did right there, right? First leg up, second leg up, third, right? Below daily level, if that's daily level, round number, $149 right there. And this is sort of 4-bar play, not exactly a 4-bar play, and it's not so clean. We're having a green, we're having a red, but a red with a bigger wick from the downside, so I don't really like it so much. Then we're having a green, then we're having a red, and then it's just breaking down. This would have been a decent entry for me. I see you entered following your style after the hammer or after the hanging man right there on the top, which is not bad. It works out for you, and I noticed that a lot. New 1 minute low, you're adding to your position, and then you're partialing on the way down. So what happened right here? Hotkey mistakes, or you tried to do something which got you stopped out multiple times? So first reversal, you get panicked, exited break even, you re-entered. Stop loss with the high of the current candle, so I guess it was here. Your stop loss. Partial on the way down, and third you wanted to trade breakdown after the M shape. Okay, I see that. So 1, 2, M shape. He wanted to get a breakdown down here. It didn't break down, unfortunately, and started pulling back up. He gets subbed out 2 times. And then you took it to the short side for a reverse ABCD pattern, which actually worked out. Okay, that's really good. I wouldn't have taken a partial here on this trade. Remember, when we are trading setups, descending triangles, we're having sort of a descending triangle here, though it's not really descending triangle. But anyway, when we are trading those setups are breakout setups, and we want to get as much profit as we can. At least wait for the break, right, for the pop, take some partial there, and then do whatever you do right there. It was 2 hours already. Okay, that's good. You got 2 hours on it, then nothing to worry about. Ivan traded NI on. What did you do there, Ivan? Would you have taken this trade? Would you have avoided it because of the hammers on the way up? So let's see first all the 5-minute chart. I think I've taken it there, and I exited break even. I think this was the trade which I've taken. No, it wasn't it, I guess. This is not today, by the way. Yeah, this is not today. Okay, I see that. So look at this. 1, 2, 3, right? 3. Was this short or long first of all? Oh, short. Okay, then that's not bad. I thought it was a long. So yeah, looking at this short, it wasn't that bad, to be honest. It's just getting so extended, and it is parabolic, right? It's not going this way. It's going like this way right there. At the top, it's giving you a hammer followed by a reverse hammer with the fake breakout right there, and then a new low. This was good. It just didn't work out. I don't think this was a bad one. Yeah, there is a false breakout, then it's getting back down where you took it to the short side. It is decent. I don't think it was a bad one. And look at the 5-minute chart, it just didn't pull back. Remember when we said that sometimes stocks, they just form the type 1 ABCD pattern where they go sideways and then they break up? Sometimes they go up, they pull back, and then they continue to go up. So we're not sure what it is going to be. Will it go up, pull back, and then continue? If it's pulling back, then that is our reward, right? If it's going up, then going sideways, and then continues, that's where we actually get stopped out multiple times, which I hate when that happens. Yeah, I agree with Peter. This was a decent one. It's not bad. I mean, when you get the chance, can you show the trades you took today? I want to understand your thought process. Yes, Yardley, I will go through my trades today, and I'll also do a recap on them in case you want to get back to it. So Dardan, let's see what you did there. You traded SMAR on the 5-minute chart, 1-minute chart, 2-minute chart. Let's look at the 5-minute chart. This was a reversal, I see. Actually, this is perfect. This is so good. Look at these guys. 1, 2, 3. I mean, I'm just going to count those. I'll not count this doji right here because this is a breakout area. And after the breakout, it did 3 candles. So the closest pivot point we have is somewhere down here. These are the closest pivot points we have right there, right? On the 1-minute chart, look at this. This is perfect. Increasing volume at the high of the day with a reversal candle entry at a new 1-minute low right there, and then just ride the trend down to the 9-moving average on the 5-minute chart. It was also $2 far from the 9-moving average on the 5-minute chart, which is somewhere around 5% if I'm not wrong. 5% or 4%. Yeah, this is amazing. A plus, exactly. It was 5% or 4% further from the 9-moving average on the 5-minute chart. There was no pivot points on your way, right? It's just going parabolically up. You are having increased volume at the high of the day. You are having a perfect reversal candle, which is shooting star with a red body, not a green body, right? Taking it to the short side and then go for the risk to reward. Now guys, the stop loss, perfect. So let me ask you, where would you guys put your stop loss in this case? This is the 1-minute chart. I will draw multiple stop losses, okay? This will be 1, this will be 2, this will be 3, and this will be 4. Dardan will put it at 2, Hamza 4, Brian 4, DP back 3, Zach 2, 3, 2, 3, 3, 1, 3, 4. Okay, perfect. Now look at this. Definitely not 1. 1, I will not use it, right? Because this is like literally above the high of the body and we are not sure what it's going to do, right? Now, I'm not going to use 4 because of my style. Why wouldn't I use 4? Because 4, it just will a little bit mess up my risk to reward, and I love to have my stop losses tight on parabolic reversals to get a good risk to reward on moves. However guys, if you use the 4, this is the safest, and a lot of times you'll notice that it's going up, not even breaking it, and then work out. So you'll have a bigger win rate if you are using 4 as your stop loss. 2, I would use it if it's going green. Now this candle is green, and once it's turning out from green to red, it's really decent. It's kind of a little bit tight, which is why I might be hesitated and I might just give it a little bit of room for 3. But if you use 2 in this case, 2 is still decent this case, still decent, and Dardan would have used 2, you'd actually use 2 as stop loss in this case, and that was at least 3 or 4 hours for the first partial and more all the way down, the rest at break even. Yeah, exactly, Peter. It just depends on how it behaved right there. Maybe if it went up, broke down, maybe came back up one more time, broke down, that's perfect. In this case, definitely I would use 2 as my stop loss. If not, I'll just give it a little bit more room. Yeah, exactly. You can use 4, and 4 is the safest. You will have a way better win rate on those parabolic reversals if you use the high of the week. But you will also have slippage if it's breaking out. This is for the first, and the next thing is the risk to reward will not be the best. But yeah, really good trade right there. Where did you pick this stock from? It wasn't on the scanners, it wasn't on the gappers list. So where did you catch it from? Reversal scanners, RSI Extreme. or the top and the bottom reversal scanners? Thank you, Gaurav. It has the colors. Yeah, that's the top and bottom reversal scanners. Thank you for letting me know. Now let's see what you did right there. This actually I noticed it. I was watching this thing. It was called in the scanners, but it was already done for the day. But this is not bad. Kind of scary because it just began the move, but the move was so crazy. Look at these guys. It's been trading with really low volume. Not really low volume, it's the usual volume for AL, right? And then for some reason, I'm not sure if it got any news or anything like that right there because I wasn't really listening to Squawk. But it's squeezing up, right? This is a really huge move right there from 1290 to 1390. That's somewhere around 8 or 7% move, right? With no pullbacks at all. At the high of the day, you are having a spinning top, which is a reversal candle with an increasing volume. Then it's making a new 1 minute low. Unfortunately, the entry was a little bit late, right? I personally, if I would have wanted to risk it, I would have risked it after it's went back from green back to red, and I would have my stop loss at half the candle and get an early entry just to have really tight stop loss. This right here would have made my stop loss a little bit far. 20 cent stop loss on AL is a little bit too much for me because this 20 right here would be only a 2 to 1, and I definitely want to get a better risk to reward. If I can get it somewhere at, let's say, 70 with a stop loss somewhere at 80, then this 40 right here would be a 3 to 1, which is completely decent. You're having the 9 moving average in the 1 minute chart for 3 to 1, and the least it could do is going to the 9 and bounce out of it, right? The news was that changing tickets is now free for most airlines. Okay, that's not bad actually. Need to buy a ticket, I guess. Okay, Lou, let's see what you did right there. You traded JD, and this was today, Lou? Yeah, September 1st, I see, that was today. That is the 5 minute chart. This is actually perfect. Look at these guys. It's going up, right? 3 candles, dropping down, starting to bottom at the top, buying pressure, buying pressure. And it's not only buying pressure, there is also selling pressure from the top if you notice it. But looking at the last candle right there, it's making a higher low with a bigger buying pressure right there. It's above the 9 moving average in the 5 minute chart. It's strong intraday, so I'm definitely more long biased than short biased on it. You see this right here, sort of fake breakdown. It's still respecting that pivot point we have right there, right? Starting to curl back up, making a new 1 minute high where you're taking it to the long side. It's breaking up this pivot point. This was an amazing ad. I love this ad. Why is that? We're having this high, then we're having this high, then we're having this high, and I don't really like that so much so far because I see that there is some selling pressure is happening from the top side, right? From the bottom side, it's starting to look better as it's eventually it's still making those higher lows. Yes, this was kind of lower high, but eventually it did make the higher low right there, right? It did make a new high right here, but we need to make sure that it's going to make a higher high from the top side, right? From the bottom side, it's looking good. On the 5 minute chart, it's looking good. You're getting in just to have a really good early entry. Once it's finally making a higher high right here, you're adding to your position, which was smart. I like it. And then you're partialing at the break. I wouldn't have partialed here exactly at the end of the day because this is an ABCD pattern, and ABCD pattern is a breakout setup. But these partials right there, they were smart. So you added because the volume started coming in somewhere right there. So yeah, that's actually also a good note I didn't pay attention to. So yeah, really good trade right there, Lou. Yeah, you definitely could do that. Just being afraid of the double bottom, of the double top, in case it's going to format, if it's giving the risk to reward, right? But if you are enough sure of what it's going to do, with the volume, with how the 5 minute chart looks like, especially that the candles are big, I would anticipate the breakout, but still not bad. I mean, better be safe than sorry, right? And I will let you know why it's better to be safe than sorry when I share my Walmart trade. I still a little bit mad at it. Anyway, LI, this is also today. LI has been in play lately, right? I wouldn't have taken this thing to the long side for multiple reasons. Guys, anyone? What do you see here for not taking this stock to the long side? It's good on the 5-minute chart with the place where you actually partial that, but I definitely wouldn't have held in for more move, for a bigger move. I wouldn't say this is a parabolic pullback. This is actually the type 2, right? It forced itself into the 9, but then it just started going sideways. So yeah, it's more of a type 2 ABCD pattern, which is decent. Yeah, the 15-minute chart, I don't like it. I have shooting star at the high of the day, right? We're having a 200 moving average, which is sloping down, and I would be afraid that it might actually bounce off it one more time and then drop down, right? And I'm not sure how much it's going to go. Will it actually touch it? Will it just get closer to it? Maybe it will get lower than that, so I'm just not really sure about it. And I don't like this 5-minute candle, right, with an increasing volume, and I don't love taking reverse ABCD patterns against shooting stars, but that is for the break. What I see that you did right here and I really like about it is you got a really good entry with a really tight stop loss, I assume, and your target was before the break of that wick right there. Just that I noticed going to the long side against the shooting star is not working a lot for the break. But if your target is before the break, then this was a decent setup, because the 5-minute chart, it's good. It went up, it pulled back to the 9 moving average, it held the 9 for 15 minutes, it gave you a really good candle on the 5-minute chart with a new high, right, hammer and then a new high. The daily chart is decent. You're having a new daily high, right? The 15-minute chart is not the worst, but I don't like this right here. I don't like the 200 moving average, and yeah, basically for the break I wouldn't have taken it, but because you had your target before the break, that was a nice trade. I took it as a bounce from the EMA on the 5-minute chart. So what was your entry, Peter B? Have a good day, Brian C. Peter, you took this trade, you told me, right? Did you take it earlier? The trade screenshot? Let me see where you sent it. Okay, I see that. Yeah, I see that. So this would have been a little bit risky for me, to be honest, because the only thing which is holding the price here is the 9 moving average and the 5-minute chart, right? I see where you took it. It dropped down, right? LI took it on the touch of the 200 SMA on the 2-minute chart, which I find is usually a bounce point for quick moves. Also the touch of the moving average on the 5-minute chart. Exit after shooting star on the 2-minute chart, regretting not parching at 1830. My target was 1840. Okay, now let's get back to it. Now, it's not bad because you bought it at the support, which is good, but the one thing which is scaring me is that the drop was so violent, right? And remember, the 9 moving average, right, it's just eventually, and the 20 moving average, they're just moving averages, right? So stocks could get closer to them, bounce out of them, or wick below them, when we're not sure when that's going to happen. Maybe if you entered like on the next minute, at least after confirming that it held it for a few seconds at least, it would have been decent. But again, this is not something I'm trading, and I can't really tell that it was bad or it was good. You just told me that you saw this happening a lot, especially on quick drops like that. So if something is happening a lot and you have more than 50% win rate on it, or you're having a really good risk to reward trading it, then you could definitely continue doing it. And this is actually good information. I will start paying attention to those just to develop my playbook as well. So red, let's see what you did there. Yeah, Peter B, that's exactly what I want to do. Definitely not to trade that, but I'll start paying attention to it and see how it works as a target for reversals. If it's really good, then I might start paying attention to that. I just didn't pay attention to that before, so thank you for that. So let's see what you did here, Red. You traded home to the long side at 1010. Guys, for the future, I definitely prefer having multiple time frames. It's better if we see a setup on a bigger time frame, then we're getting entry based on the 1 minute chart, right? But anyway, looking at this chart, decent move right there. It's trying to pull back, right? Coming back up, pulling back, breaking sort of a pivot point right there, not selling off to the next pivot point which are having, right? Dropping down, can't even make it to the low of the previous low, coming back up for a breakout where you are taking it to the long side, partialing at the breakout, which is amazing. This is how we should trade it, right? Breakout setups at the breakouts closer to the daily levels, another partial, and another partial, kind of a little bit partials right there. I am also at fault of that, but if we can hold on for the partials to be good, like this partial was decent, this partial if you still had a lot of shares is good, this partial is definitely good, right? It's just too much right there of a move already. Exactly, not too much partials actually, it's one extra looking at this, but yeah, really good job there. So let's see what I did today. And should I start with the most painful trade, guys? Okay. Walmart. This is something I'm really mad about, to be honest. First of all, what was my thought process? Why did I decide to watch Walmart? Okay. Well, I told you before, I love trading stocks which are trading sideways in pre-market. Sideways. Basically, this is sideways for me. It's not making a huge move to the upside. It's not making a huge move to the downside, right? It's going sideways. I have a clear resistance area above me. I have a clear support area below me. Once I see that, I go in for the daily chart, right? On the daily chart, what's Walmart doing? Walmart is sitting at all-time high at that moment. This is the yesterday's high. This is yesterday's high. So basically Walmart is sitting at all-time high. Okay, all-time high. It has no resistance above it, and the only resistance it has above it is the pre-market high. Once it's breaking the pre-market high, it will literally have nothing above it, and it could run a lot. I love those trades for one, breakouts or opening range breakouts, and two, for good trend trades. And I am good at holding on those type of trades. What's happening on Walmart at the open? It's selling off. I don't like it for a short. It's at all-time high. It still has a pivot point somewhere down here. It has a pivot point somewhere down here. It has the pre-market low somewhere down here, or maybe down. This is yesterday, I think, yeah. Somewhere down here. I'm not sure why I marked this one. Maybe down here. Let me see if that's actually still the pre-market. Yeah, it's the pre-market, somewhere down here. So basically a lot of potential bounces down there, and the risk to reward will not be good. My plan is to take this thing to the long side, and I'm waiting for it to take it to the long side. What's happening after that? It's going up, it's pulling back, it's coming back up. I'm taking my first entry at the break of this small point right here, and moving my stop loss, or having my stop loss at a new 5-minute low, which is there. Let me zoom in this here. Okay, now you might say this is a really wide stop loss. It's around $1.50, so your 2-to-1 will be around $3. When I'm trend trading, I always add to my positions at potential bounces and move my stop loss to a new technical level, just to have a good risk to reward on those ones. What do I have after that? I'm going to, and this is why I'm mad actually. Anyway, what do we have? We have it dropping down, right? I see that it's holding this previous resistance area right here, because it held it once, held it twice, held it 3 times. It's bouncing out of here. Now it's holding a new resistance area above which it's breaking up. I'm taking it to the long side and moving my stop loss somewhere down here, if I'm not wrong. Yeah, it was somewhere down here. Anyway, it's going in my favor, and this is where I broke my rule, guys. Kind of a parabolic reversal, right? A new 1-minute low. Right there, this was around 3 hours when it made a new 1-minute low. I could have locked in at least 1 hour or 2 hours, or I could have just held on, because this level right here, it wasn't my max loss. My max loss was a little bit below that. It was around 141.98 or 141.97, somewhere around that. Anyway, what I decided to do is to exit a little bit above my break even, because I did not like the double top with the second top lower than the first one. Still, there was literally no reason to exit. Why is that? Market is trading in waves, right? it made a nice move to the upside, which is from 140. And look at that, we didn't have pullbacks in the 5-minute chart, right? We just had a clear move and a consolidation. Still no pullback so far. From 140 to 144 with no pullbacks, it's normal to see a stock making a new 5-minute low. Then we're having an ABCD pattern, and this would have been normally a place where I could just add to my position and hold on for a move. So two things I should have done. One, either I should have taken a partial right there and then move my stop loss to break even and exited break even, which is fine. Or two, hold on to my trade to my max loss, because this is still not weak, right? It's still above view up, above the moving averages, above everything right there, right? And it's still not looking weak for me. It's still at all-time high. There is no reason to exit even after these type of pullbacks. They might seem scary, but they are literally not scary for me at this point, unless they start making waves to the downside, which it just didn't do so far. No, I didn't lose a lot. I exited before my break even. Now, this is the most painful trade I did today, because I had my plan on it. I knew it will be really good today. And by the way, guys, in the chat room, if you noticed, I called it right here. When Andrew was doing a recap, I called it at this stage, and I told you Walmart is going to break the high of the day. I didn't take it after that for re-entry because I was done for the day trading Zoom and NIO. But anyway, looking at this and looking at the 5-minute chart, I was pretty much convinced looking at this ABCD pattern right here, looking at this grinding level right here. And I knew it will break the high of the day. Not sure if anyone took it, but yeah, it actually did it. I'm kind of mad that I didn't re-enter and I didn't follow my call myself right there. Anyway, another trade I have taken was Zoom. Zoom was decent and I'm happy with how I traded. Same thing on Zoom. Where are we, guys? We're at all-time high. What do we have on Zoom right here? We're having a clear pivot point on Zoom. Kind of here, kind of here, kind of here, and yeah, it could be kind of here, okay? Anyway, it's at all-time high, and I like Zoom, and I like these type of stocks when they at the open, when they sell off. So it's selling off, it's bouncing from 410. 410, I think it was a level from before. Let me see that. 410, 410, 410. Where is it actually? Yeah, it's I guess it's from here. 410. Anyway, bouncing from 410, I don't really like it. Okay, yeah, exactly. But support and resistance levels, intraday levels. Anyway, it's going up. Look what's happening right here. Sort of curling price action, right? And then it's breaking this point right here. And this is how I trade. I want to see new highs, because this was the high, this became the low, then that became the high, then that became the low. And I want to see that the trend is changing. I see that it's coming back up, and now we're having a new high right there. Once I see that, I'm taking it to the long side at the break of that point. Then I see that it's pulling back, bouncing, coming back up. I'm taking it at the breakout, moving my stop loss, and taking a partial at the pre-market high. Notice that I didn't go for a break of the pre-market high, because here this is like a huge move right there. This is a huge move right there. Already a lot of candles. I didn't expect it to break. I expected it to pull back first before it's continuing, but I noticed that it actually broke it, and I just exited all out once I reached my 5 hours on this trade. Why didn't you take it at 435 at the bounce of the moving average right here? I didn't take it at the bounce of the moving average because I had this point right here, and I was afraid that maybe I will take it to the long here. I'll have my stop loss here, and it will bounce off this point and of this moving average and then drop back down. I wanted to make sure that it's actually going to break it. Once it broke it and I noticed that it's actually working, I took it and I gave it so much room. I know this is so much. This was around what, $15 stop loss, right? Then I'm adding to my position one more time, and I'm having around $4 stop loss or $5 stop loss on it after the add. So when I'm trend trading, I don't just get in and having $15 stop loss and aiming for, I don't know, 30 or 70 or $30 move. Yes, I did get $30 move, but look at this. With this entry and this stop loss, this is my 2-to-1, and I don't want to have this big of a move for only 2 hours. This is why when trend trading, I keep analyzing the price action, and I still watch it closer for ads. Those ads, only one ad, like one ad when you are doubling your position, would mean that the move for 2 hours will be 4 hours. Sometimes even more if you are moving your stop loss tighter, then it's right there. So one ad on moving on trend is good. Two ads, it's like amazing. Your initial 2 to 1 will be a 6 to 1. And if you're adding all the way up and moving your average higher and higher, it could be even more than that. And let's go to NIO now. NIO, I had one break-even trade, one good trade on it. So what do we have on NIO? Today, it gapped up, right? Yesterday, it had a really strong move. So on the daily chart, I have an ABCD pattern, kind of a breakout pattern. So looking at this, I'm long bias on NIO. I don't like the setup for the short side. I know some people in the chat room took it to the short side. Andrew made really good money on NIO to the short side, but that wasn't the play which I was looking for on NIO. Looking at NIO, I'm having the high of the pre-market somewhere up here. I'm having the low of the pre-market there, and I see that it's not really weak in the pre-market, right? It's dropping down, it's coming back up. It's dropping down, it's coming back up. And I noticed that it might drop down, it might go to the previous day close, might go to the pre-market, and if it bounces and comes back up, I'll be interested in taking it to the long side. If it's not doing that, just let it sell off. I'm not really short biased on it. On the daily chart, I'm having at $18 support area, 1883. We have a lot of moving averages down there. When I go with the trend, I want to see a good direction on the daily chart. This is my key point. Now, what's happening on NIO? We're having an engulfing candle after 10 minutes, right? And then we're having a bullish engulfing crack. First play I've taken on NIO, it was a quick scalp play. I didn't get in for a trend. Why is that? Because if I take it to the long side here, for a trend, my technical stop loss would be at least here or at least here. And I'm not sure how much it's going to pull back. It could pull back, bounce, and I will not be able to add because this is already my stop loss and it already went closer to my stop loss. If I add here and then it gets me stopped out, I'll just have a big loss. So this entry is not suitable entry for me to add, right? Anyway, I took it for a quick scalp. I see that it's not working. I'm exiting for at break even and then I'm paying attention to it. Now I'm having sort of a bounce right there. It's on the 1 minute chart, but still I like it on the daily. I like it here. I like that it got back into the range, so it broke the range, right? But then it came back into the range. And when the stock is getting back into the range, it's just showing you that it's not so much weak. So I'm taking it to the long side, putting my stop loss below the wave, right? And then I'm paying closer attention to what it's doing right there. What do we have here, guys? We're having a break of range, right? You see there is sort of a pivot point right here. Sort of a level of resistance, maybe here, I'm not sure where it is exactly, right? And that's what happened right there. It's breaking it, I'm adding to my position and I'm moving my stop loss. Breaking out, and after the breakout, pre-market high, I'm taking a partial. Notice, guys, if the pre-market high is after a huge move like this, I would take a partial at the pre-market high. If the pre-market high is flat, I would go for a break of the pre-market high. For example, yesterday's trade on Zoom, let me share with you one trade quickly I did yesterday on Twitter. Profile. So this was Zoom yesterday. Look at this. Yesterday it was sitting at all-time high, right? And basically there is literally no level above it except for the pre-market high. It gapped up to all-time high. The only resistance above Zoom is the pre-market high, and it's so flat. And it was around $1, and I know that Zoom on the average true range is $10, $12. Like the list we're having right here is somewhere around $3, $10. So it's moving a lot, right? $1 move at the open is not too much. Once it's breaking the pre-market high, what does it have above it? Like nothing, literally nothing, right? So why would someone short it here? Why would someone short it here? Why would someone short it here? This is how I choose my watch list for breakout plays. I'm taking it to the long side at the break of the pre-market, then I am starting to sell or partial all the way up. Then look what's happening. It's dropping down. It's not literally so weak. It broke the point right here. It got back into the range. The stock is at all-time high. I like it for trend trades, and then I'm just adding to my positions. It's an ABCD pattern. I'm waiting for the breakout right there, and then partialing at all the way up right there. This is how I just try to choose my watch list. I think I had also two loser trades. Let me see where I lost. I lost money on Apple and I lost money on AMD. Let me share those trades with you as well. Apple was a bad trade, to be honest, but it's not that bad. The bad about it is that it was already a huge move with no pullbacks, right? And look at this, eventually it did it, right? So you just pay attention to those type of stocks. Where is Apple? It's at all-time high. What's the level which is above it? The pre-market high. If it's breaking above the pre-market, what does it have above it after that? It has literally nothing, right? I'm taking it in the pre-market for the break of the pre-market high, giving it way big of room in case it drops down and making a new 5-minute low. If it bounces, I'll add to my position. If not, then that's it, right? So it's getting me stopped out. I'm not mad about it. I'm mad that I actually entered in the pre-market. That's my only concern, like 1 minute before the market open. But look what's happening after that. Double bottom, right? Coming back up, sort of a grinding level. You could enter to your position here. You could enter after the double bottom right there because it's more strong, right? This is a good trade to play for the trend. And then what's happening? A break of the pre-market. This is a place where I usually add to my trend trades. The break of the pre-market, start taking partials, and now it's going up, right? After it's breaking the pre-market level at all-time high, it has nothing above it. This is a really good play, but I just played it a little bit in a wrong way. AMD was my last trade for today. Same thing, AMD at all-time high. The only level it has above it is the pre-market high. Right here, this was a horrible trade. This was not a good trade and I'm not proud about it. First of all, in the pre-market, it's not looking so great. It has pivot points above it. It has a pivot point right here. It has the pre-market high right here. I'm taking it right into the face of the pre-market with a really bad stop loss, which is not even the low of the wave. And I get stopped out. So this trade, I'm not really proud of. Let's see what it did after that. Look at this, it's not really weak, right guys? It's chopping in a range, but it's not that weak, it's not selling off. So if it starts getting back up, and I think it's looking better right here. We're having high, we're having a new high, we're having high. So basically it's still not that strong, right? On the lows, it's kind of getting to the upside. So I'm definitely a little bit more long biased on it. If it gets cleaner a little bit and starts giving us good candles, good small budget 5-minute candles, I would like it to the long side for with a target of the pre-market high, and then if it breaks the pre-market high, I would add to my position for a break of the pre-market. If it's not doing that and it continues going sideways, then just avoid trading these type of stocks for the day, right? No need to force it because it's not looking so good. Not on the 1-minute chart, not on the 5-minute chart, not on the 15-minute chart. The 30-minute chart is looking decent. Buying pressure, buying pressure, buying pressure, bad candle, buying pressure, new 30-minute high, and now new 30-minute high. So I think it's starting to be bullish, but it's still just not ready so far. So yeah, those are my trades from today. Do you guys have any questions? Can you take a quick look at WBA? Yes, I can do that. Sergio, it is common to find that double bottoms on the or double tops on the 1-minute chart, but it depends on the time of the day, whether you want to take them earlier or later. If they are parabolic and they are forming a double bottom or double top on the 1-minute chart, then that could work out. If not, trend trades could be safer. Now WBA, it's not literally parabolic. If you just draw this line, just looking at it, it's not going parabolic, right? It's dropping down, consolidating, dropping down, consolidating, dropping down, pulling back. It's not literally parabolic, but looking at it, yes, it is sort of far from the 9. It's not even far from the 9 on the 5-minute chart. It's 20 cents only, right? So basically, I wouldn't really like it. And the daily chart is bleeding so much. The volume is not increased at the low of the day. Yes, it's a hammer at the low of the day. It could work out right here because of this fake breakdown, but it's not something I would take, to be honest. Hamza, I have a lot of dreams when I'm having a good opinion range breakouts which are making me a millionaire, then I'm waking up disappointed. But yeah, that's it. Anyway guys, have a good day everyone. Respect your rules, don't force any setups. It's afternoon is slow, there are good opportunities, but you need to be patient waiting for them. And yeah, I guess I'll talk to you in the chat room. Guys on YouTube, have a good day as well. If you have any questions, anyone, member or non-member, feel free to email me, ayman@beerbulltraders.com.